Hey, how you doing? It's Clayton Tini from the First Home Buyer Club. 100 lessons, 100 days, day 75, lesson 75. Today I'm here with one of my property coaches, Don. How you doing, mate?
I'm good. How are you?
Perfect. So what I want to talk about today is Don's first property experience, because it's not all about me and my experiences along the past. Everyone has a different experience. And when you buy your own home, you'll have a different experience than someone else. So today what we're going to talk about is things that Don went through personally, what he discovered good and bad, and things that he'd do differently moving forward. So firstly, Don, what I want to ask you is tell me what happened. First time.
My first property purchase was essentially a refinance with my
Yeah.
parents.
Perfect.
So in order to reduce the interest rates and stuff, because they were paying a high amount, we decided to
Yeah.
refinance it and
Yeah.
add myself into the loan.
Yeah.
So it was three applicants, me and my parents and I went in, refinanced the loan, and
Yeah.
then I got part ownership of our home.
Perfect. And, you know, the part that he doesn't talk about is the fact that he actually, as a result of buying in and getting the lower interest rate, save somewhere in the vicinity of $10,000 to $15,000 a year in mortgage repayments straight away, which means that he's automatically now the money that they were contributing, he's paying down the home faster without even doing anything differently. So tell me a little bit more about how did you find the experience as a whole?
Experience was good.
Yeah.
I went through to a broker in CBA and he handled the whole situation.
Yeah.
And it went really well, smooth transition. Only had to see him a couple of times to sign some paperwork and to get some advice. Other than that, he did all the heavy work and everything was done within a couple of weeks, which is good.
Perfect. So obviously we've started on the good points. Tell me, what were the bad points that you involved when you're purchasing?
Bad points, I would say, is that because I got the existing purchase from my parents, I missed out on all the grants and incentives that the government gives you. So I missed out on the 15K, but at the same time, I got the incentive of accepting the stamp duty.
Yeah.
But the losing out on the 15K was a bit of a kick in the guts.
Right, okay. And the other thing, and what he doesn't talk about, is obviously, yeah, it does suck when you miss out on all the incentives. And if you're a first home buyer right now, it's actually 40 grand in cash. However, as it's happened, he's purchased with his parents, got him a really low interest rate, so they're paying less than what they were paying before, which automatically we're paying it off faster. And then on top of that, he's already got some equity that was inside of the house. So at some point, Don's going to move out and look at purchasing his second home. And now we've got the equity base to actually leapfrog and do that a little bit earlier. Now, one of the bad points he sort of covered on, but I'll explain it a little bit more, is that when Don did go to purchase his first home, he was given the wrong advice from the solicitor in regards to the ownership. And because he only purchased 1% in his name, because he was led to believe that just buying a 1%, he only has to pay 1% stamp duty. But as a first home buyer, he didn't have to pay that, right? So he could have actually had a higher ownership percentage and gone up to 50% and still avoided paying stamp duty on the purchase, which then would have helped him out later down the track. Now, tell me, you've been working at First Home Buyer Club now, what, about 3-4 months? Awesome. So if we were to put our hat on and do the whole thing again, what would you do differently?
What I would do different is I'd definitely go to a broker instead of directly to the bank, so that I can get all the options that is available from different lenders rather than just one bank who's only going to give the best option they have.
Perfect. And, you know, I'll paint a bit of the back picture of what happened. So Don went to CBA because he's always banked with CBA his entire life. Now, if you've heard my stories over and over again, I had the Dolomite account when I was like 5 or 6, and guess what bank I went to for my first home, right? We just do it. The thing is that he went to the broker was amazing and it runs smoothly, but he could have had other bank options that he could have gone to and potentially got even lower interest rates again. Brokers are really great. Obviously, if you go to a broker that works directly with one bank, you've only got an option of one bank's worth of loans. If you go to a broker that's got 20, 30, 40 on the panel, you have a bigger selection of banks that you can choose from. As a result, you can sort of price shop a little bit around, because at the end of the day, the banks don't offer too much value on top of actual interest rates, offset accounts, and fixed or variable rates. Tell me, is there anything else you want to talk about with your experiences with owning your own home?
Only thing I can say is, even though it was just a refinance stuff, I still feel like a homeowner, which is a great part, and it's a great feeling to know that you're owning your first property, which will set me up for the next property later down the line.
Well, 100% refinance or not, you're still owning that home. Doesn't matter if it's new, it's old, or it's ownership with family or friends, you're still owning that home. So at the end of the day, you just need to look around and make sure that you are doing the best interest for yourselves. Now, I want to talk briefly about something. I got a question sent in today, and also I want to give a shout out to Patricia. I know you've been watching our Facebook Lives. How you doing? I want to talk about self-employed and what you need to consider when looking for your own home. Now, you need to have 2 years of financials. There are banks that will accept 1 year financial, but you have to be operating for at least 2 years, right? So when considering that, you probably need to focus on a bank that will allow only 1 year financials, which you need to have a 10% plus deposit. Now, there are certain banks, again, that will allow you to use the first home buyer grant and home builder towards your deposit, but you can't go above that 90%. There are some great options out there. Ask the right questions for you and your family. The other thing, if you are actually self-employed, are you paying yourself super? Because for years, everyone just as a business owner, tried to avoid it. It's something that the ATO is personally cracking down on, and you could get your business in a lot of trouble, which if your business is in trouble, you're in trouble. The other thing what I want to talk about in regards to self-employed is that, especially if you're older, make sure that you actually crunch the numbers and are working out what you need to do to pay off that home in a fraction of the time, right? So if you're in your late 40s, early 50s, work out the numbers. You can jump online, you can talk to the team and work out how are you going to pay that home off in 15 years or less. And do you have the ability to do that with your current budget of rent and savings? Because you don't want to get into a 30-year mortgage at 55 with no understanding of how you're going to pay it off. Now, that's it for me, Don. I hope you guys enjoyed today. Yell out if you need anything. We've got, I think, 35 days remaining in the Home Builder Boost. So there's $40,000 in free cash to get into your own home. So if you've got questions, just yell out and let's do it. All right, guys, have a good day. We'll talk to you later. Bye.
Thanks, guys.